All right, I am back from Vegas. It was a nice trip, relaxing trip with my wife. We saw a couple shows. We did some gambling. I came back with some money. I didn't lose everything, so that's good. It was a good trick. The hotel was comped at the Bellagio. Fun time. But now it's back to business. I missed Friday, was a trading day, and I hate missing trading days because I trade every single day. Now, I did get in on the red eye at 2:30 a.m. this morning, and then now it's 2:30, so I did get some sleep in. So I am ready. I'm going to take a look at Cleveland Cliffs, give you an example of what a wheel looks like. Now, I trade 30 to 40 names on a monthly basis, sometimes on a weekly basis, the same names. It just depends on where they're moving. Now, I want to take a look at Cleveland Cliffs. Cleveland Cliffs, right at a year ago, actually at the beginning of the year. So let's do year to date. At the open, on the first, it was at 16.10. So it was just above 16. And then through January, it went all the way up to 22. So it had a nice ride all the way up to 22. Went down a little bit to 19, went up to almost touching 23, and then right back down into this 18 level, and then right back down here to this 14. Ultimately 1361, and then it's been hovering between 16 and 18, and then it just took a nosedive recently. So let's correspond this with my trades. Let's take a look at what I did. So here's my trades at Cleveland Cliff. Okay, I sold a put at 13 to open it up. Remember, it went all the way to 16. So this didn't get triggered. I was able to buy it back. And then I sold a put at 27. Okay, and that got expired. So I got lucky there. No, I got put at 17, sorry. And then this was a put at 16. Sold the put at 16. I was looking at the price. Sold the put at 16. That didn't get triggered. Sold the put at 17. That didn't get triggered. Pocketed both of those. And I sold the put at 16 again. And then I had to buy that. It triggered. That was in May. So I was on the hook in May. I had 16 or I had 100 shares at $16 a share. I was in 1600. I sold a call at 19. Bought it back. Sold another call down further at 1550, or I bought it back, then sold at 1550. That expired. Sold another one, and then I sold. Ultimately, triggered it. So I held it from May to June. So I held it for about a month, collected 3 premiums, and then I just bought it outright last month at 1608. Then sold a 1550 call that got triggered, and then on top of that, so between 1608 1650, I made this plus the appreciation from 1608 to 1650, and then this is where I sold it. So this is the buy, this is the sell, and then I collect the call premium. Okay, and then that got assigned. I bought it. Sold another call last week for 1550 at 1832. So we're only talking about a 1550 stock, and this is over 1%. This is like 3%. This is over 1%. This is over 1%. So this is over 3%. So I'm doing like 1% hits, then 3%, then 1. That's of my money, and this is over and over again over an 8-month period. Okay, so that's what the wheel looks like. Let's take a look. I downloaded this so I could get some numbers. So I was a net buyer at 878, and that does not include appreciation at all. This just includes my money that I put in, bought and sold, bought and sold, bought and sold, offsetting each other, and then and that's it. So I had no shares, and I was in for 878, and I collected a total of $214.71, and I currently own 0 shares and have 0 money applied to it. So that's just a $214 free and clear. with no obligation whatsoever. Now, you notice I sold a August 11th put at 1550. It's the 14th right now, and this actually got triggered. So I am in at 1550, but the transaction hasn't posted yet. So let's see what's out there for 1550. Let's continue the wheel on Cleveland Cliffs. Let's go to the daily. And this is what a beautiful, beautiful situation looks like. So I got assigned at 1550. So let's go back. Let's go back to the 15. So I sold a put right here, and it got triggered because of this dip right here. Dip below the 1550, dipped all the way down to 1366, and I was negative about $200 on this. Okay. And then some news broke. They're having a deal with U.S. Steel. And it went from 1330 in the pre-market all the way to 1622. And then it pulled back a little bit. It's currently at 1620. I am in at 1550. So I could sell the covered call. August 18th, that's 4 days away. And a 1650 call is 26. I'm in at 1550. So I could sell the covered call for 83, which would be the highest covered call premium for the entire year. I'm going to pull back a little bit because I want to keep those 1550 shares. So I'm going to go 16. See how tight this call put premium is, or the bid and the ask? It's the tightest other than this one. Okay, so let's do the 16. Sell the 16 at, let's do a cool 50. Put that in, and I get the 50 in premium, and I get the 50 in appreciation. So this is a $100 trade on 1,500, and I'm already up 214 on this. So they're triggered. That is how you wheel.